Disclaimer: stock trading is inherently risky and the users agree to assume complete and full responsibility for the outcomes of all trading decisions that they make, including but not limited to loss of capital. Matthew, chapter 25 verse 14-30, "For it will be like a man going on a journey, who called his servants and entrusted to them his property. To one he gave 5 talents, to another 2, to another 1, to each according to his ability. Then he went away. He who had received the 5 talents went at once and traded with them, and he made 5 talents more. So also he who had the 2 talents made 2 talents more. But he who had received the 1 talent went and dug in the ground and hid his master's money." For today's video, we are going to talk about envelope indicator. Envelopes are technical signs that are usually drawn over a price chart with upper and lower limits. The most popular type of envelope is the moving average envelope, which is made with 2 moving averages that set the upper and lower price range levels. Traders and buyers often use envelopes to find high overbought and depressed situations as well as trading bands. 2 moving averages above and below a central moving average form an envelope indication. Based on market circumstances and trading techniques, a user-defined percentage or value sets the distance between the upper and lower bands. The envelope indicator's upper and lower bands indicate resistance and support, respectively. These levels might assist traders find entry and exit locations. How envelopes work. Traders interpret envelopes in a variety of ways, but the majority utilize them to create trading ranges. When a security's price approaches its upper limit, it is termed overbought, and a sell signal is triggered. When the price falls below the lower limit, the security is deemed oversold, and a buy signal is issued. These tactics are founded on the ideas of mean reversion. Typically, the upper and lower boundaries are established in such a way that the price tends to remain inside the higher and lower thresholds under normal situations. To minimize whipsaw trading signals, traders may use bigger percentages when establishing the envelope for a risky investment. Meanwhile, lesser percentages may be required to provide a sufficient number of trading signals for less volatile equities. Envelopes are often used in combination with other types of technical analysis to increase the likelihood of success. Traders, for example, may spot possible opportunities when the price swings outside of the envelope and then examine chart patterns or volume metrics to determine whether a tipping point is approaching. After all, assets may trade for extended periods of time in overbought or oversold positions. The most popular sort of envelope indicator is the moving average envelope. An envelope is produced by specifying a specific percentage to define upper and lower boundaries using either a simple or exponential moving average. Consider the following 5% simple moving average envelope for the S&AMP, P500 SPDR, SPY. Traders may have taken a short position in the exchange-traded fund when the price went above the upper range and a long position when the price dropped below the lower range. In these circumstances, the trader would have benefited from the reversion to the mean throughout the subsequent periods. Traders may set stop-loss points at a specific percentage beyond the upper and lower boundaries, whereas take-profit points are often placed at the midway line. Conclusion for the envelopes indicator. We hope you find this overview of the envelopes indicator helpful. Remember that developing a comprehensive Forex envelope indicator strategy entails more than simply receiving signals that tell you when to buy and sell. To trade well, you must also use excellent risk management, strict discipline, and a methodical approach to quitting both winning and unsuccessful deals. It is usually advisable for novice traders, as well as experienced traders, to practice on a risk-free demo trading account before moving on to the real markets.
That's all. Thank you for watching. I hope you learned many new things about the stock market. Kindly subscribe to our channel and click the notification bell. Also follow us on our Facebook page to learn more about the stock market.